So we are on market structure. Now you can mute your mic so you can hear me clearly. So whenever you have question, you can turn it on. If you have question, you can turn it on. Okay. So now we've complete our course outline from candlestick, and now it is time for us to understand market structure. I understand that you've started the concept of market structure previous class, so we are still going to look at that over again, because market structure is very important for you to understand in order to know when to trade, where to expect the markets to get to, and where to exit from. So all of this, with the help of market structure, you will be able to know the proper place to get in on a trade when the market is moving either to the upside or to the downside. All right. So what we want to look at, we are going to look at the bullish market structure. The bullish market structure. So from previous class, we already learned about the bullish, bearish, and the ranging market structure, how it looks like. We already learned that in a bullish market structure, we want to see price breaking structure to the upside. This is a previous high that was created, and price will come down. The movement where price moved from the top and then it reverses back a bit before continuing to push up is what we call the retracement move. The retracement move. You can also call it an exhaustion move. It's just more like price start from this low and push to this high, then price now gets tired. So at that point where price is tired, or that point where price is resting, we have it retracing back before it have another strength to continue pushing forward. So when price push forward again, the push phase, the point where price is pushing to the upside, is what we call the impulse move. The impulse move or the impulsive move. You can also call it the push phase, because it is from this point price will move in its direction. So here price is going up. So this point here is called the impulse or the push phase. Then we have price dropping again. So when you are in an uptrend, let's say you are in a trade, you don't expect that the market should just keep moving on in your favor and then you expect it to move in a direct straight line. Let's say you buy from here and you're expecting something like this for price to keep pushing. You cannot have this kind of movement in the market. Price will usually moves in waves. So this is how price is going to move till it eventually gets to its final destination. So if you want to take a trade, you take trade when that retracement is getting to an end, and that is the point we called our higher lows. Higher lows. This is the point you want to take your trade, because it is from this point that is when the price will push up. So we want to be able to catch this move. We want to be able to catch this move. You don't want to trade when price is at the peak. Trading a buy at this region is wrong. With the help of market structure, that is why we know it is wrong. It is not a better point to be buying. You want to buy when price drops lower. That is why we used to hear the concept in trading that says buy low and sell high. So we don't want to buy here. We feel like buying at this point is too expensive and it's just too high. We want price to come a bit lower then before we can take a buy movement to the upside. So we want to make sure we place our trade at the point of higher lows. So if price should drop again, we want to take our trade at the point of higher lows. So today what we want to look at is how can we get in on a trade. How do we know that this point is likely to be where that higher low is going to end, and we are now going to have that push phase? So that is what we want to look at today. So let me bring this to, we have this higher low, higher high. So if you should have something like this, you already know that this is a bullish direction. This is not bearish. This is a bullish direction because price is pushing upward and we have structure in play. So what you then want to do is to mark the previous high. Now this is a recent high. This one here is a recent high, but what we want to make use of is a previous high. This is the previous high right here, this one. That is what we want to make use of, so that we'll be able to position ourselves for where we expect it to be a new higher low. Then we can take trade in that market direction. So what you want to do here, now you'll be making use of your rectangle tools on your trading view charts. Where you get that is here, the option 6 from all the tools that you have at your left hand side here. You click on this and then click on rectangle. So what we want to do is to come on this previous high point and mark our rectangle tools on it. After we must have marked this, we want to extend it further because price already passed away from this region. We expect price to come back to that at a later time, so we need to extend this further. So when we extend this further, price already pushed up, that give us a new high. So we want to take trade. We understand that with market structure, price is going to retrace down, so we cannot take a buy trade at this point. So what we want to do is that we want to wait for price to drop lower. We want to follow the concept of buy low for price to drop lower.
Sir, I did not.
You sir? Hello, what do you say? Hello sir. I can't hear you. You can use the chat box if you have any question or so. You can use the chat box.
I did not see your screen, sir.
You can't see my try to refresh your network. My screen is shared already. It might be your network. So try to refresh your network. So we are trying to take okay, all right. So we are trying to take a buy trade, but we don't want to buy at this point. We want to buy at a lower price. So what we need to do is to wait for price to pull down, to drop all the way down. So we now make use of the previous high. We expect that this previous high should be able to hold price for going lower. Since we've been able to identify that this trend is bullish, we don't expect the market to keep tanking down. We expect it that we want to push up. So what we then do is to mark the previous high. When we mark that, we expect that this retracement, this exhaustion, this point where we are going to have our higher low should be here because of this previous high. Now this concept is also working more like a support and resistance, so we expect that this point should hold price as a support level for it to push up to be able to give us a new high. So this point here that we have waited for price, what you then want to do pay attention to here is to pay attention to your candlestick. That is why we have to treat our candlestick first. You have to pay attention to your candlestick. You want to watch out for bullish candlestick that's going to trigger a buy decision. Either your pin bar, your hammer, bullish marabuzzo, bullish engulfing, morning star, the three white soldiers and the likes. These are candlesticks you want to pay attention to at this point before you take a buy trade. So now let's assume we already took a buy trade here and market has go up the way we've projected. Now we've exited, we've taken profit. How can we get in on this trade again? If at all we want to get on this trade again, how can we get in on that trade again? What you want to do here again is to mark the previous high. When price was here, this is the previous high. Now price is now here, the previous high is this point. So you want to bring your rectangle tools again, mark the new previous high and also extend further. Same thing we did here, where we wait for price to come. You also wait for price to come. Always wait for price to come. Always wait for price to come. If price fails to come to you, then you don't need to chase after it. Always wait for price to come. So when price come back here, we want to look at our candlestick here again before we can take a buy trade. We want to look at our candlestick before we can take a buy trade. So our candlestick will be the reason why we will have to jump on this trade for a buy, and we are expecting price to keep pushing higher. So this is like a first basic way as to how you can enter a buy trade in a bullish direction. We still have other technical tools that we'll make use of, because sometimes as we're expecting price to hold at this point, price might dip lower a bit and also still continue to push up. So in this scenario, there's other technical tools we are still going to learn about that will still help us to be able to catch trade from this point. But for now, this is what we want to stick to. We want to make use of previous high, making use of previous high to mark a rectangular level, then wait for price to walk into it, and then we'll look to take a buy trade upon candle confirmation. We need to see candle confirmation before entering that trade. Before entering that trade, we need to see candle confirmation. Do you get it, sir?
Yes, sir.
Okay, so I would like to go to the chart so we can look at different examples on this. Let's look at it. So this is AUD USD chart. Let's start with this AUD USD. Now I want to look at where we have a bullish trend. Okay, this is the 15-minute chart. Let's use the 15-minute chart. Now we have price pushing up here. You can see this move, that this is an uptrend. This is an uptrend on this time frame. So if you want to identify this structure here, this is the low that this price starts from, and all of this is a long impulse move. Then price corrects, which is the retracement, a push up, push down, push up, push down. So we are expecting a continuation move of push up. So you can see now that you've been able to identify the trend. So now that we've identified the trend, how do we take a buy trade? What I explained to us just now is that we make use of the previous high. This is the previous high right here. Now we expect this price to pull down here and push up, but price didn't do that. It still come lower. You know, I said this is just like a first step of how to take a buy trade. So in this case, we would not have taken a buy trade. Because we are yet to know the other way around that we should have taken a buy trade at this point. So we wouldn't have taken a buy trade. Price drops lower and gave us a new high. Now price giving us a new high, we would want to mark the recent high, the recent previous high, which is this, and still extend it further. But what happened here again? Price still went all the way down. Now for price going down, it now looks as if we came back to this first previous zone. Now this is now more of like the concept of support and resistance. So here has been holding price before as a resistance. It holds here at a support, resistance, support. Price already came here before and then push up. It is still our previous higher low. Now price is here again. What we expect here is that price should go up. But before we take that decision that price should go up, we need to see candlestick. We are yet to see any candlestick that will make us place a buy trade here. This is a dragonfly doji, and we said we don't take trade based on that candlestick. It's only giving us a heads up that we should expect a buy from this zone. Then the next candlestick happens to be a neutral doji. We are not taking a trade. This next candlestick now is looking more like the spiny candlestick. So if this should close, we are still waiting. So this candlestick is going to close now. So now that candlestick already closed. It closes as a spiny candlestick, and the spiny also is indicating that buyers, we are likely to reverse this market that has been coming down. We are likely to reverse it up. So we still need to wait for the next candlestick to form. So the next candlestick, if it closes as a bullish candlestick, let's say a bullish engulfing or a pin bar or a hammer, then that is our entry candlestick. That is the candlestick we are going to use to enter that trade. Our stop is going to be below, and we are targeting that price should give us a new high, because we've been able to identify that this is an uptrend. We've been able to establish that this is an uptrend. We expect price to push higher to give us a new high that will be higher than this one. You can see that what has been happening before, whenever price pushes up, it gives us a high that is higher than the previous one. We see what happened here. Price push up and drop, but when it push from this point to this point, this high is higher than this. It drops again, this high is higher than this. So hypothetically, that is also what we are expecting to see. That is how we speculate in the markets. This is how you will know that, okay, this is where I'm expecting price to get to based on your technical analysis. So when we now get that candle confirmation here, we expect price to give us a new high since we are still in the bullish direction. But before price gets to this high, we need to pay attention to some levels that may hinder price from pushing further up. But that we are going to understand that well when we get to the concept of support and resistance. But for now, you just want to be able to identify the structures and where to get in on a trade if you are in a particular structure. So if you are in an uptrend, we want to take our trade from the higher lows. The higher lows are the points where we want to take a buy trade. We want to take a buy trade at our higher lows. So this is an example. Let's look at some more examples. Let's use another charts. Let's look at the gold charts. Let me pick a new chart. Okay, let me change this price market. Okay, this is a gold chart. Let's change to 4 hours charts. All right, so now if you look at this, you can see that this market has been in a strong bullish trend. We've been going up, 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 up. Now this is a high and this is a low. This low created this high. We saw that after price pushes down from here, then we have this spike up. Now when price is dropping, we know that this is a bullish trend. Where should we position ourselves? I said we want to make use of the previous high, which this is the previous high. This here now is the recent high. This is a previous high. You mark the previous high points and expecting that the market should come to these points before we look to take a buy trade. And you can see that price was only a little bit shy away from that point, a little bit shy away from that point, and now we see price pushing upward. So this movement that is pushing up, we expect it to give us a high that will be higher than this. So on gold, we still expect price to continue pushing further to the upside. That is what we are expecting on gold, for price to push higher. So we have this, let me mark these two now. We have this as our high, higher low, higher high, higher low. So now we expect higher high. So the juicy part of this is that you want to exercise patience. You don't want to jump on trade. You don't want to jump on unplanned trade. So if you understand market structure so well, you will know that you need to exercise patience. You don't just have to, because okay, now I've learned about candlestick, then I can jump on trade if I should see the bullish engulfing. If you are seeing a bullish engulfing candlestick at a high, then you should not be buying. But if you should see a bullish engulfing at a low, that is when you should be buying. I hope I'm communicating. That is where you should be buying from. You want to make sure that you buy at a lower price. You buy at a lower price and expecting price to continue pushing up. Okay? So we expect price to continue to push upward. That is that. Let's look at another chart. Let's change these charts. Let's look at looking for trade that is bullish. Okay, I think we have something like that on GBP AUD. We have something like here on the day chart. Yes, hello, I can hear you.
This good chart. You know, the price did not come back to just high.
Sorry, I can't hear you.
Can you hear me now?
Hey, yeah.
Can you go back to that gold chart?
Okay.
No, when you say previous, it's the you see this previous resistance level, the
Yeah.
one you mark, yes, yes, that place. So you see that price did not come back to that level.
Yes.
Yes, yes.
Yes, that was what I was saying.
So
That
if you see that kind of chart, you will just leave it up. You wait. The market will create the higher high.
yes, thank you. You will have, that means if you did not take trade here because price did not come here, you will have to wait for price to create another higher high so you can make use of this one. Do you get that? But we're still going to be learning
Okay,
about. You will
is
still.
it a must for market to come back to previous higher high, or
I don't get you. Come again.
I'm saying is it a must for market to come back to
Ye-
this previous
yes,
high,
it
the
is a
one you
it
mark?
is a must. It is a must. It is a must. You have to wait for it to retrace. Now there are times whereby price may not get to this previous high, just like this one we are seeing here. You can see that it's just a little bit. There are times whereby price will be far away.
Yes.
Let's say maybe from this point here, and price will not come here at all and start pushing up, but there will be reasons that will back up your trade here to have taken a trade here. So maybe you have seen some different concepts aside from this. That is why I said we are treating this first. This one is just like a first step. You still have another ways that you can get on the trade. Okay, but for now this is what you'll be using. If price did not come back there, then you are not trading. If price did not come back to
Okay,
that
sir.
point, you are not trading. Aha. Okay, so please you can help mute your mic. All right, so if price should give us a new high like this, what we then want to do is to mark the new previous high, which is this one. So we bring the rectangle tools again and mark it like this. So we expect that price should also pull back to this region, and then we will continue pushing higher. So on gold we still expect price to continue pushing up. We still expect price to continue pushing up. So this is how you identify a bullish trend. Price needs to move in waves to the upside, which we called our higher highs and higher lows. Higher highs and higher lows. If we can't see structure like this, then it means that that structure is not a bullish trend. It's not a bullish trend. And if you want to trade, you only want to trade a market that is trending. It is either trending up or it is trending down. If it is going nowhere, then that time you have to avoid that asset or currency pair. You don't want to trade it at that time. You do not want to trade it at that time. So that is how you identify and mark a previous zone. So let me just recap that. What I've been saying so far is that we've been able to identify a bullish structure. The price will usually moves in waves like this, which all of these points is called our higher highs, and here is called our higher low. And we said this move is called the impulse move. This is the retracement. You can call it correction. you can call it pullback, this is impulse, you can also call it the push phase, retracement, push, retracement, push. So now I want to take a trade in this kind of structure. How do I place a trade? You make use of the previous high. This is the previous high. Price retraces back into that, wait for candle confirmation, then you will look to take a buy trade. Use the next one. If price has already break this high and give us a new higher high, wait for price to come back and test this level, then wait for candlestick, and then you buy. If price still continue to move in that direction, what you just want to be doing is to mark your previous high, then wait for price to retrace back into it, and then you are going to trade in that upward direction. So this is what we've explained so far. The floor is open now for question. Any question, Mr. Odetola? Question? Adetola rather. Any question, sir?
Okay.
No,
No question, sir.
no question.
The question I have that.
It has been answered. Okay. So now what I want you to do now is that I want you to go on your charts and replicate this same thing. So that is an assignment. So I want you to look at a market that is bullish and identify the previous low level. Mark them with your rectangle tools. Do at minimum 5, then send it to our Telegram so we can access you on that if you get it right or not. Do you get that?
Yes, sir. Yes, sir.
All right. So that is what I want you to do.
Well,
So we'll continue from next class. Good day, sir.
all right, sir. Thank you, sir.